A very good day to you all. Welcome to Wall Street Blockchain Alliance's special crypto industry call to discuss the recent presidential executive order on digital assets. My name is Ron Quaranta, chair of the Wall Street Blockchain Alliance. It's my privilege to moderate today's session with two great friends and colleagues in the industry. Before we begin, a little bit of housekeeping for today's session. This webinar is being recorded. All attendees will be in listen-only mode. Attendees, we really do encourage you to submit questions to our guests via the Zoom chat. Pardon me, we'll be reserving 10 to 15 minutes at the end for Q&A. Please keep in mind that this event is offered for general information and educational purposes only and is not intended to constitute investment, legal, tax, or accounting advice. I think, Philip, you and Dina have heard that from me way too much. And then finally, any and all views and opinions are expressed during this event are those of the participants, including myself, do not necessarily reflect the views of the Wall Street Blockchain Alliance or our participants' firms. So with that, let me begin with a quick introduction. Ron Quaranta, chair of the Wall Street Blockchain Alliance. We've got two great guests here. This is going to be a very conversational presentation. I want to give them an opportunity to introduce themselves to the audience as well. Dina, why don't you kick us off? Tell us who you are. I know you, but let the audience know who you are, who you work for, and what your focus is.
Sure. So my name is Dina Ellis Rochkind. For those of you who don't know me, I spent most of my career on Capitol Hill, on House Financial Services and Senate Banking. I also did a stint at Treasury. Currently, I am at Paul Hastings in the fintech and payments practice, and I spend most of my time doing, advocacy work, lobbying, as well as giving companies strategic advice and doing advisory work. Most of my clients are in the cryptocurrency, blockchain, and fintech space.
Great. Sorry about that. Thank you. And Philip, please say hello, introduce yourself, let the audience know where you're coming from.
All right. Thank you, Ron. I'm Philip Berg, and I'm chairman of the corporate department at Otterbourg P.C, which is a New York City based financial services law firm. And I'm co-chair of Otterbourg's Data Privacy, Cybersecurity, and Digital Assets Practice Group. And we represent a lot of banks and financial institutions and other clients in the finance space, and our kind of digital assets and blockchain practice kind of grew out of the privacy sphere, and we've been dealing with this since about 2016. We have lending clients who ask about how to secure, get a security interest in digital assets, et cetera, and so excited to be here today, and I think this is a great development for the industry.
Thank you, Philip. Thank you, Dina. So one of the things we did in our prep session, and we've had conversations with industry colleagues about the executive order, which we get the perspective was a long time coming. One of the things we've often talked about is kind of the tone and tempo. Dina, I want to start with you, and again, very conversational. We can have this conversation between the three of us. Audience members, again, please enter your Q&A as we go. Dina, what were your overall thoughts about the EO? You've got long history on the Hill, so you know that something like this doesn't materialize out of thin air. Talk a little bit about the overall impression, kind of what the mechanics might have been to get us to this point.
Sure, and Ron, I really want to thank you for inviting me to be on this webinar today. I'm a huge fan of the Wall Street Blockchain Alliance because we really do get into the weeds when it comes to cryptocurrency and blockchain. So I'm glad to be here.
Thank you.
So I have to say, my first thought when I saw the executive order was, this is really fantastic because I'm a lobbyist, and this is like definitely full employment. There's so many agencies involved. That means you have to go visit all the agencies. And even when you look at a lot of the studies that are being done, there's not only just the agencies working together, but there's also typically some kind of administrative clearance process where it has to go through many agencies. So a lot of players in the mix. You also have to lobby Capitol Hill and make sure that, because the Hill and the agencies influence each other. And the reality is you're already seeing some things happen on the Hill, I think in part because of this executive order. So you already have a hearing scheduled in the Senate Banking Committee this week on illicit finance. And then last night I saw that there's a hearing in the House Financial Services Committee on central bank digital currency. So this is going to be a ton of lobbying, definitely good for the influence industry. So on my bigger picture thoughts on the executive order, I just want to sort of state my thoughts on crypto and blockchain really quick so that everyone doesn't think that I'm anti-blockchain and crypto by the things I say. So I am a huge believer in the cryptocurrency and the technology, the blockchain. I think a lot of the things listed in this report, all the concerns about illicit finance, many of those are being solved, but can be solved even better than what we do today with illicit finance in terms of being able to trace funds on the blockchain, but also, having sort of reg tech that, or, that can be baked into smart contracts. I think that the potential for financial inclusion through your smartphone is tremendous. And I think that payment systems could be more efficient, faster, and there's going to be more competition in the payment space. So I wanted to make sure people sort of know my thoughts up front. The thing that I worry about the most, and the executive order makes me worry about, is that somehow the industry gets, the underlying activity exists today, but the industry winds up with more regulation that it really that is really necessary. And I can see something that like this with some of the power grabbing that's going on between the different agencies. So for instance, I would worry a lot about if every single stablecoin, for instance, was considered systemically important and regulated by the Fed. And there's other, examples like that. So that's my biggest worry. So on the executive order itself, I'm impressed. It's, you can tell it's gone through a lot of reviews. It's definitely well written and very thought out. I guess the most important things about the executive order is that it does coordinate the agencies. And I know it's everyone's saying the whole of government approach. When you have the White House stepping in, the National Security Council and the NEC pulling everyone together, it will help to alleviate some of the food fights, but also make sure that there is a comprehensive approach. I think the other really important thing about this is that it shows that the US is going to be a global leader when it comes to coming up with a regulatory framework. And the language in the executive order about all that sort of working with, FATF, FSB, other parts of the world on a regulatory framework globally, I think that's very important. On the tone, which we're talking about a lot, the tone, yes, it's fine, but this is a political document. So I didn't, industry, if it was sort of very negative about industry, it would cause a lot of anger on a bipartisan basis and with the public. And it would be, a lot of players wouldn't come to the table to discuss. So I'm not surprised that it's written this way. The other thing I would say about it is that just because the industry is getting attention in Washington, that's good, but you don't want all negative attention. You want to get some you don't want to be you don't always want to be in the middle of everything. So, the example I would give is I was at Chrysler, we kept during the bailout or rescue, and we kept getting called to the Hill over and over and over for hearings. That's not something we really liked. Big tech companies who've been hauled in for hearings. I won't name them, but it's not really great attention. So I'm almost done, Ron. So the timing, I think of this as it was in the works, but I don't think it's I do think it came out during this time because of what is going on in Ukraine and concerns, even though you can trace things and the technology is good, concerns about evasion of sanctions, concerns about some of the parts of the industry saying we're not going to block Russians from certain transactions. But that's why you see a ginormous focus in the executive order about national security. So you're talking about sanctions, illicit finance, dollar as the reserve currency. And then the second, I think, most important thing is systemic risk. And the reality is, if you don't have national security, especially since post 9/11, then you don't have anything. You don't have any investors or consumers to protect if we don't have any national security. So my take on the big winners in this is that the One more thing. So the central bank digital currency, I think that is a strong possibility. There's so much language in there, but the devil is really in the details. Like, so is it going, the Fed already runs payment systems like ACH. So is it an upgrade, or is it going to be really broad? I don't see them disintermediating banks, but is it going to be really broad? And I think a lot of this mention of central bank digital currency and how it's going to work could be sort of this big threat in terms of how the industry negotiates. So if they're like really good on national security and some of the other issues, there may be more of a place for the industry in terms of central bank digital currency and not all being government. So the big winners, I think, and I'll be done in a minute, the big winners are really, aside from the White House, if you look at all the different studies, the Treasury and the Federal Reserve are really the big winners, and they're almost one and the same because Janet Yellen has the Treasury, but she's really a Fed animal, and they are the lead on most of the studies. And so my concern would be that with them being the lead, that there would be a bias towards, sort of bank regulation and potentially systemically, SIFI regulation. And the last thing I'll say is that, yes, this executive order is a bunch of studies. It is not, telling the agencies to put out regs, but you won't see enforcement going away. And so you'll continue to have lots of enforcement actions. And this executive order coordinates the agencies, so the enforcement may be more coordinated. So I'll stop there.
Thank you, Dina. Really appreciate that. Philip, I want to turn that over to you. You both have clients in the space. Philip, I'm curious about your perspectives on the EO when it came out. I'm curious about client perspectives to the extent you can speak to that generically on the executive order as well. And then Dina, you touched on a lot there that's amazing. I want to peel back some of the layers and a bit more granularity as well. But Philip, your take when this EO came out.
Thanks, Ron. And thanks to the Wall Street Blockchain Alliance, I agree with Dina that it's a fantastic organization, and and for all you do for it, Ron, it really needs, organizations like this need to be there. And I think this now is a time that the government is saying, well, help us out. So I would think a lot of clients would say, okay, Wednesday there was this executive order and it calls for a whole of government study and regulation of this entire crypto industry. By that, I mean, shorthand for cryptocurrency, blockchain, DeFi, digital asset space. And then they're probably looking at how did the industry react? Did they push back like the financial services industry did for, when think about Sarbanes-Oxley or Dodd-Frank? And the answer is no, it's the opposite, that the major players came out in enthusiastic support, and the major cryptocurrencies went up in value. And the reason for that is that the US crypto industry has been being held back by regulatory uncertainty and regulatory inconsistency across federal agencies and across the states. Is your digital asset a security, a utility, a currency, or a derivative? And then which agency has jurisdiction and which of their regs apply? And in the case of the SEC, which is the organization I'm used to dealing with as a securities lawyer, there literally is no official binding crypto regulation in place now. There are speeches, there are reports like the Dow report, there's non-binding guidance, and there's of course regulation by enforcement, which seems to be their primary blunt instrument tool. And as this executive order points out, when an industry is $3 trillion and growing fast, it should reasonably expect to have certainty about what laws and regulations must be complied with and how. And this seems to be a top-down approach saying, you know what, we're not going to defer to the independent agencies that are used to dealing with this, the SEC, the FTFC, the Consumer Financial, they are going to take it from a top down because there needs to be kind of a radical rethinking, perhaps, or at least, instead of agencies trying to shove digital assets into 1930s constructs of what one should do to protect the consumer, they're saying we need to think of this fresh. And the second big important action here is that the executive order calls for Treasury, the Fed, and their advisors and others to basically design, study and then design a central bank digital currency And so it's not a request to kind of look at CBDCs and see if they're a good thing or not. It's actually, in my view, a realization that the genie is out of the bottle on this, and that there's 100 countries that are looking to design a digital equivalent of paper currency, and it's a direct, it's a widely distributed digital direct obligation of the Fed versus, you know, a lot of our money now is held in banking entries, digital entries on with commercial banks, and with private you know, fintech companies, and we have no digital way to have a direct liability of the Fed, which means there's no liquidity risk and there's no credit risk. And so they are saying, not take a look at this, but they are saying, okay, we need to do this, and we need to actually lead the world on this. Otherwise, we put the country at risk of losing our place as the reserve currency. And I'll take this one sentence out of the, you know, this whole order. I think it's probably the most important one. It says, a United States CBDC that is interoperable with CBDCs issued by other monetary authorities could facilitate faster and lower cost cross-border payments and potentially boost economic growth, support the continued centrality of the United States within the international financial system, and help protect the unique role that the dollar plays in global finance, i.e., you know, the world's reserve currency. So, you know, in sum, none of this was really a foregone conclusion before last Wednesday. You know, prior administrations, you know, to the extent they even addressed crypto, were pretty skeptical and viewed it more as a threat to be mitigated. And in my reading of the tone of this executive order, is that it's being viewed as primarily as an rapidly expanding opportunity to be studied, you know, properly regulated and aggressively pursued. You know, as they pointed out, over the past 5 years, you know, this industry has grown from 14 billion to 3,000 billion, which is, you know, 3 trillion. And it doesn't show any signs of slowing down. So responsible regulation needs to be put in place, and we need to stay on top of this on the world stage.
Philip, thanks. Dina, I want to dive a little bit into, so we've been touching on this, the kind of alphabet soup of regulators, and everyone on this call, and the three of us, certainly the perspective on Securities and Exchange Commission has been a difficult one over the past year or two, particularly, you know, we've talked about regulation by enforcement. We have colleagues in the blockchain and crypto space that call it regulation by intimidation. I'm not sure I'd go that far, particularly given some of the commentary. But there's this palpable sense that, and I think, Dina, you mentioned it in kind of the notes we shared as we were prepping, the SEC was mentioned much less frequently in the EO than I would have anticipated. And a couple of folks have put in the Q&A. Is this kind of a push back against kind of that difficult, tough enforcement perspective that the SEC chair has, or are we reading too much into that? Dina, you want to start that, and Philip, I'd certainly love your thoughts as well.
Yeah, so that's a really good question. So, you know, I would say in terms of the SEC and Chairman Gensler, that he really does understand this space. He really understands, you know, financial markets in a way that most people don't. He, you know, has been very aggressive in terms of the actions of his agency, enforcement actions, you know, putting out a reg on ATSs that really probably pull crypto into the orbit. But, you know, the SEC, you know, some of the areas that they've gotten into, you know, like things like, you know, some of the things like for instance, like BlockFi and DeFi, that some of that looks like a lending product, you know, can be a security, but maybe the banking regulators should be involved in something like that. I think that the SEC, you know, the SEC plays a role in investor protection, but, and CFTC does as well. The prudential regulators, though, play a role in terms of consumer protection. You now have the CFPB involved as well. And as I said before, I really do think that the winner in this is Janet Yellen. I think she's been taking the lead. She just is not as, Gary Gensler really doesn't hold back on his views. He holds back a little bit to not disrupt the markets, but generally he's very upfront. I think Janet Yellen is very tactical. She's incredibly smart, but she's also dealing with, national security issues. So she has to be careful about how she speaks. When you think about the pecking order of these different issues, national security has to come first. So, sanctions, sanctions, illicit finance, especially what's going on in the world today. National security is like, everyone remembers, well, maybe not everyone, but a lot of us remember 9/11. And that has to be coordinated out of the Treasury Department with FinCEN, DOJ, etc. Systemic risk, is probably next in the list of things. And systemic risk, again, like if you're gonna, I don't think it's large enough right now for systemic risk, although stable coins, to the extent they're growing, you could, if it's not regulated in some way, you could have runs. So when so it's really the pecking order, and then central bank digital currency, which is related to stable coins and sort of the, preserving the dollar as the reserve currency. Those issues they're all important, but those issues are more important than, they come before investor protection and consumer protection. And those agencies like the CFPB and the SEC and the OCC, those agencies can, they can have enforcement actions. A lot of those agencies are independent. They can do some things without, on their own. So I think that's why you're seeing less of a focus on the SEC. And I would say that I know that everyone is like terrified of the SEC, which I totally get. But they may seem after a while mild as compared to the CFPB or the Federal Reserve or Treasury. I know that's hard to think of, but.
Dina, thanks so much. Philip, I want to give that question to you as well. And I do want to ask, Philip, you and I have had conversations. Is the age of quote unquote everything is a security in the crypto space kind of evaporating because of this? Is that kind of what we're looking at? We've often joked that SEC sees anything that's walking down the street might be considered security in the crypto world. And I'm probably being a little more flippant than I should for a webinar. But Philip, your take there from that SEC perspective, and Dina, let's tie that back in a little bit later. There's so much detail to go into here, but really the coordination across these regulators is something that I find interesting. But Philip, please, you first.
Well, thanks, Ron. And I think this this executive order does show a pathway to coming out of the everything is a security view of the SEC. There have been speeches where Gensler has said he perhaps only Ethereum and Bitcoin are non-securities in this space. And he is there was a lot of positivity about him going into this because he actually taught blockchain courses at MIT before this, but he hasn't seemed to warm up to various proposals at the SEC, including from crypto mom to to provide a pathway to becoming a non-security.
Philip, for the audience, just mention who Crypto Mom is. I think we all know, but just to make sure the audience is aware.
Yeah, that's one of the five commissioners, Hester Peirce, who it tends to be our voice on the SEC. And
thank you.
But then you look at this executive, and Gensler tweeted in support of this, and I don't, it's kind of like a good sign, because if you look at, there's 11 reports and there's 25 agencies approximately mentioned in this thing. Treasury leads 8 and is involved in 16 of the different to-dos, off of this. DOJ is next, whatever. The SEC is leading one project here and is involved in a total of 2. So it's way down the list in terms of, as Dina was saying, all the how we get what cooks are in what kitchens to come up with these 11 reports and other updates. And so, I think there's definitely a signal that we're not, the highest priority is not these priorities that the SEC traditionally, the lens that it thinks through, and we need to think more broadly. And like Dina was saying, national security, global leadership. The SEC's jurisdiction does not extend outside of the United States. Even environmental issues here, proof of work, protocol spreading, which consumes a lot of energy. So, I am hopeful that this is kind of a more fundamental reworking of the way that federal regulations provide a framework of rules that you have to abide by, that doesn't start with the idea that you have to, by default, create this vast registration statement, get it registered and passed, signed by the officers of an organization, when that construct is a ill-fitting suit at the very least, and just it's not trying to use legal precedent that's been developed since the 33 Act and the 34 Act is cumbersome at best. And this seems to be saying, this is a $3 trillion industry, it's growing fast. We need not to stifle it with inconsistent or non-existent regulations, but we need to expand it, encourage it, but do it responsibly. So
Philip, just to interject on that, we're not envisioning a revisiting of the Howey test, correct? Just to be clear.
I don't know where this is going. This is like a whole bunch of 180-day and 210-day deadlines to come up with recommendations on that. I think there'll be a lot of people heading from New York to Washington over the coming months, and I'm surprised Dina's not packed already. To go. But
I'm in Washington.
She's there.
Oh, she's
I
there.
have to be in Washington.
But so when these are all reported on, and then public comment and they're digested, we'll see. I'm not sure if that precedent is the best way to put things in categories of being a security or not.
Philip, one more thing on that point. Dina, certainly chime in here, and I don't certainly mean to be focusing only on the SEC here. There's CFPB, CFTC, so many of the other regulators. I do want to put out the idea that, and the Chairman Gensler said this often publicly. I'd like to clarify that for the audience. Certainly clarify that for members. He's often said, "Come in, quote unquote, and register." And one of the pushbacks we've had is from members and colleagues in spaces, register is what? And I think that's been a bit of a difficult pill to swallow for some in the industry. Does the EO help that at all, or is that part of the kind of collaboration discussion? Dina, you have thoughts there?
Yeah, so I think that the executive order, first I should say this. As much as the executive order is a public statement of we're going to take the global lead, we're going to coordinate the agencies, you can tell that a lot of time was spent in this document in terms of who was going to do what. So, there's so many, there's a lot of administrative kind of things in here that bring a lot of players in to review the studies. So I would say, I'm sorry, I'm like forgetting the gist of your question. I on the SEC.
Coming in and registering, is the perspective on coming in and registering changing because of the EO?
Yeah, I think that the executive order breathes life into the other agencies. So, some of the times when I've read or I've had clients that chose to go to, the SEC, I thought maybe they shouldn't be going to the SEC. Maybe they should be going to the OCC, or maybe they should be going to another agency. So I think it, there's other opportunities to be regulated at a federal level. That's not necessarily SEC. The thing about the SEC though is, and I think this changes things going forward, is I don't think you can get around, Bitcoin exists, Ether exists, all these other coins exist, right? But I think over time, it's going to be very difficult to do a capital raise, any kind of capital raise, even if you call it a token, without, registering, either being a private security or, some kind of, public company, which is much more onerous. He wants everyone to come in and register to be, he wants the exchanges to come in to be, ATSs, and that's a pretty onerous process. And to the extent that you have an ATS and it's trading private securities, for the most part, you're limiting yourself, not in every single case, but mostly you're limiting yourself to accredited investors. And that's the big issue with the crackdown with the SEC, is that the whole crypto space grew because of retail investors that wanted to invest in something new because of all the limitations. So I see that as the largest issue going forward with the SEC is, you're kind of going to pull a lot of the retail investors out of that space over time. And
Ron,
Go ahead, Phil.
yeah, I wanted to, it's switching gears a little bit, but I saw in the messages we have one already about, and this is about the CBDC.
Yeah.
And basically, would the feds consider adopting an established coin like stablecoin like USDC and use it as a base for its framework? And I wanted to say to that, it's in drilling down on the CBDC issue over the past weekend and prior to that, the Fed has done a lot of work here already. And a lot of it's acknowledged in this. They had a paper, Money and Payments, the US Dollar in the Age of Digital Transformation, just this January, that set forth a lot of these questions, and may have had a big role in this executive order. But they realized that, that this is probably the future of circulating currency. Now, remember that circulating currency is only 10% of like the monetary supply, the M2, measure of overall money. A lot of it is digital entries at the Fed or digital entries at commercial banks, and now digital entries at private fintech companies and others. And we're not talking about something that would cause everyone to take their money out of the bank and put it in this. It would probably not be interest bearing. It's more like just a cash you would keep enough cash to work with. But the Federal Reserve Bank of Boston actually has done work with MIT and already has a white paper out for Project Hamilton, which actually specifies an architecture or a possible architecture for how you could have a blockchain-based, central bank digital currency. It's just an idea, but I mean, a lot of work has been done here. And the answer to this question would be no. They're not going to just adopt some private, stablecoin system, because they want to engineer it from the bottom up to be secure and to promote national security, to leave them all of their monetary policy tools that they have now, where they can increase monetary supply and decrease it, not screw up with that, not screw up the whole commercial banking system with the whole new, asset. And, and they want it to be interoperable with other countries that we deal with, so that, we can put right into the architecture of it our sense of, our human freedoms and all of the, but still the anti-terrorist thing and all of that. And, so they really want to do this from scratch, and they want to make sure that it's done right. And I think that this is, it's interesting. I would encourage people who are interested in this to look into some of these, there's a whole white paper on the Project Hamilton Phase 1, and there's other projects out there, but
we'll share that. We'll share the link to that. Yeah, we'll share the link to that in the WSBA. Go ahead, Dina.
Can I make a comment on central bank digital currency? So yes, I think that the report or the executive order talks a lot about central bank digital currency. You can tell that we're going to have probably some kind of central bank digital currency. The question is, how broad will it be, right? How sweeping will it be in terms of what the Federal Reserve is doing? And when I say that, what I mean is, and a lot of this has to do with how well the industry lobbies and doesn't just fight every single thing and be opposed. Part of the reason why the dollar is powerful, yes, it has to do with the US government, it has to do with our legal system and those kinds of things. By the way, I know people who have left Ukraine, and they actually, some of them have crypto, but like I know someone who like had already had all these dollars stashed, like hundreds of dollars. So, it's still the reserve currency. But the other reason that the dollar is so powerful is because we have such a robust private sector in the US that's very innovative, more than any other place. And when you think about things like Visa, MasterCard, American Express, Discover, and all the different payment systems, those are global brands, and they're global brands of American companies. So I think it's very important, the Fed and the obviously they will partner up with private sector players. They're going to have to, but they usually are kind of slow at this. I think if the industry knows how to play this right, which means, sort of being very helpful on the AML and the national security piece, that you could have a CDBC, which is important, but it's more about, sort of what the Fed does today in terms of payment systems and interbank transfers and modernizing it, combined with new private sector entrants maybe that exist today, or even new ones. And it has if you have enough competition in that space, right now it's mostly interchange fee, right? It's fees when you talk about consumers. It could have faster, frictionless. It could be a lot less expensive if there was more private sector involvement. But I think how central bank digital currency, how that comes out, and how much the government is in control of it in the U.S. Is going to depend on the lobbying effort and the activity of the crypto industry. And so I worry a lot about having the government just really being overly broad in terms of its role. And yeah, they do mention privacy a lot in this executive order, which is good. But we don't want to have a central bank digital currency that is like China's, where it's being used for surveillance.
Yeah, and this is an opportunity for industry participants to really have those conversations in Washington. Philip, I cut you off. I apologize. Go ahead.
Yeah, I was going to say with Dina's discussion on this light touch regulation. Think back to the Telecommunications Act of 1996, which was just the time when information flows were taking place over telecommunications lines, and they had the foresight at that time to create a new category that wasn't a common carrier, that if you were in an ISP transmitting information, you weren't a common carrier, so you weren't subject to all those common carrier restrictions and interoperability things. And they also had the foresight at that time to put in the section 230, which said if someone else publishes and you transmit it, that you're not liable for that, even if you do some content moderation. But the laws and regulations that were put in place, I think that one particular act, are the reason that if you go to the top 5 companies in the world, like Google and Amazon and Facebook and things, that those are US companies, because we gave them the space to thrive and grow. And I mean, maybe now people are looking back and saying, well, now we should use some antitrust kind of apply some of that or whatever. But if we don't take that same regulatory approach to do it, not stifle it, but encourage it, and just put in the proper guardrails and protect people appropriately, 10 years from now, how many of the top corporations in the world will be US based. And so if that's something we care about, and I think the president, the White House obviously cares about that, their last whole of government executive order, I think, was on competitiveness. In fact, we have to tread lightly on this. And that's why I'm kind of thinking that the SEC may be taking a slightly less role on this, and there'll be superseding kind of regulations put in place.
Yep, Philip, I want to move on, and I appreciate that, both of you. I really appreciate those perspectives. We've got a lot to cover, and we've only got about 10 minutes or so before Q&A. Just announcing again to our attendees, thank you for joining us. If you have questions, please put them in the Q&A. We'll be addressing them at the end. I want to pivot a little bit. Philip and Dina, they calls out illicit finance early. And one of the pushbacks within the industry has been, well, all right, you can make an argument that there's some level of illicit finance, but a lot of data shows not a whole heck of a lot relative to the global banking system and illicit finance. Let's speak to that a little bit. Philip, let's stay with you a little bit first, if you wouldn't mind, and Dina, and then we'll give it over to you. Does the government understand the data set associated with illicit finance and crypto? And what more does the industry need to do to kind of make that argument to them?
Well, I think they do understand some of the fundamentals here of in a blockchain technology. It's everyone can look at the blockchain and you can identify what's going on between wallets. You just can't necessarily identify the owner of a particular wallet. But with more analytics, it's getting closer there. So it's not an anonymous type of currency at all, but it is something that has been associated with various illicit finance, but probably in an exaggerated way. But if you look at kind of the CBDC part of this, they're saying, well, it needs to be intermediated because we need to keep the banks or other organizations involved, because they have already developed the tools for know your customer and anti-terrorism financing. They do identity checks when they onboard a client, and so they would probably be the custodians. The industry right now, the finance industry is the custodian and are the people who are reporting up to federal authorities suspicious activity, keeping all the KYC and doing all of that work, which helps with the anti-terrorism financing. And I think they want to make sure that this industry isn't a way around that. So they they'll probably put some kind of identity and different obligations on on certain players in this industry. But overall, I think a big problem, and I found this in going to Capitol Hill, and I've worked on a couple, like the Token Taxonomy Act, and is as you're going from congressperson to congressperson or around the House Financial Services Committee, finding people who have real expertise and understand this is not an easy thing. And it's a totally different kind of technology, and it's very decentralized, and people are used to saying, well, where is the stack of cash, or where is the computer that this is the blockchain is on? Well, it doesn't, it's everywhere. And I think it's going to take a big education effort to make sure that this is done right. And it is in the there is one of these reports, is a report from the Science and Tech Administration that basically tells them, do we have the infrastructure, do we have the expertise in the federal agencies, and if we don't, what do we need and how do we get them? And I think that's a big piece. We also need that in the legislative branch in order to get the right laws passed.
And to that point, Philip, and we're not a lobbying organization, the Wall Street Blockchain Alliance, but as you know, and the members who are on the call do know, we'll be visiting Washington in the next few weeks to that, to add to the education conversation as well. Dina, your take though on the illicit finance stuff, and I want to stay with you for a little bit because I also have questions around. I'm going to go back to this idea of cooperation across multiple agencies as well. But Dina, you've been in DC again a long time. What's the illicit finance perspective? How accurate is that, and what does the EO do to to Philip's point, to clarify some of that and some of the things that are going to be available?
Sure. And I think, Ron, I won't talk about it right now, but I think we might want to talk about, since we touched upon it, is the antitrust language that's in this. But on the illicit finance, I'm sorry, say the question again.
What does, I mean, is the focus on illicit finance appropriate and accurate given a lot of the conversations in Washington, which are, look, there are some folks in the legislature that will continually say the only use that crypto has is for illicit finance or tax evasion. Not true, or at least clearly not true to those in the industry. What's that kind of ear to the ground in Washington perspective now that the EO is out and talks about illicit finance?
Yeah, I mean, so when it comes to, I mean, some of this I would say is on the industry. So let me say this first. So when it comes to, anti-money laundering, illicit finance, terrorist financing, it is, and when you have turmoil in the world like we are right now, you're not going to have a lot of members of Congress who are going to want to step up and be like wholly against those kinds of provisions. You're going to have support on a bipartisan basis. I learned this the hard way, actually. I was at Treasury after 9/11 when the Patriot Act was passing, and I thought some of the provisions didn't make sense and was pushing against them in the way that the crypto industry is now. And that is not, it's just a big mistake. So I think a lot of the problem in this area has been that, whenever there's been a piece of legislation on anti-money laundering or various proposals on anti-money laundering, the strategy has been to say, we can't be helpful, it's decentralized, it's an unhosted wallet, blah, blah, blah. I think that approach really needs to change to, okay, we need to quietly sit down and see if we can work out some kind of compromise. And, also I think over time there's going to be, and I'm not a technologist, but, if smart contracts are going to be so smart, they should be able to bake in regulatory compliance. And I'm also a big believer in, digital identity and not having to actually use your documents. So that can change things as well. But I think that opposition to a variety of things combined with the latest, I think, is, corporate America has been stepping up when it comes to the crisis in Ukraine. Most companies are going above and beyond what is required of them under the sanctions. And so I feel like I think it's great that that there's crypto contributions going to Ukraine, but I think it's tone deaf to fight against blocking the Russians. Even though I know that there are innocent people, there always are in war, but the notion is to tighten the screws on the people that tightens it on Putin. And so, when it comes to humanitarian aid in Russia, that's it's a UN issue. It's not really the crypto industries. So I think that on this illicit finance piece, it is very critical that the industry sit down with various players in the executive branch, and there's way more. There's way more in law enforcement officials in the executive branch than there are regulatory officials when you really look at it. And so I think it's the approach, right? I from a media perspective and from a rather than just going guns blazing, we're opposed to this legislation. You really need to come in and say, okay, let's figure out a way we can do this. And that's true with these kinds of things. The banks really partner up with the government. This is a tremendous you can see this as oh God, this is, we don't want to have to do this. We shouldn't have to do this, but you can also see this as an opportunity. And to the extent that the industry partners up with FinCEN and Treasury and other NSC, they're going to create better relationships in the administration. And I think, some of the regulatory issues like central bank digital currency maybe could go in the direction of greater innovation versus more regulation. So I think the government has to feel that trust on these national security issues, and that the other issues will fall into place much easier.
That's a really great perspective, Dina. I want to stick with one thing that you did raise and pivot a little bit. But one of the things that was directly raised in the EO that I thought was interesting, and we've been focused on for many years, is this idea of leveraging the technology to help and manage access to financial services for the unbanked or the underbanked. Just to pivot to that perspective a little bit, one of the great dreams or perspectives on crypto was giving the unbanked. And in the United States, I think the last data I had read, maybe one of you knows differently, goes back several years. There's something like 60 million Americans who are either unbanked or underbanked for a variety of reasons. How critical is the EO's perspective on that to, aligning the regulators, aligning the agencies to make some of those services available? And I want to add one little wrinkle to that as well is, to me, that's very much an industry product on-ramp question, which is, what is the industry going to do to make services available to the unbanked and underbanked? Is that a focus for the executive branch? Is that a focus for government and clients? Philip, do you want to kick us off there?
Yeah, it doesn't. I mean, I think that's a incredibly important aspect and a promise that this space holds. And I saw like 40, but that was just unbanked. So you're probably right with the 60 million, which is a big number. And there's no specific, of the 11 or so reports, there's no specific report on this, but I do think that a lot of the work being done here is being done to enable the private sector to deliver these services. There are, with the CBDC and just allowing tokens of different stripes to find a regulatory certain way to develop and transmit value would allow entrepreneurs to come up with simpler and simpler ways for people, not even with a cell phone, but with some way to instantly get banking services that do not require going into a local branch when you might not have a branch very close at all, and require that you have a certain credit level or whatever. I mean, these are very democratic, concepts that if you have a digital token, it's worth the same, to you as anyone else. And when you are just a wallet address, you're not, you're the same as any other wallet address out there. And, so this should be basically setting the framework and the regulatory framework to allow these to thrive, which I think, I think the actual pushing into the parts of the United States that are underbanked and unbanked will largely be left to the private sector, as I don't see, other than the CBDC, which may result in something along those lines. But other than that, I don't see in this executive order a specific drive to an agency to say, how do you get out there, and please come up with an API or something that gets us there.
Fair point, Philip. Dina, I want to give you that question for 60 seconds. And the only reason for that is I want to be cognizant of time. We've got a bunch of Q&A coming in and chat as well. But Dina, your thoughts on the unbanked aspect of it and both industry and government's role.
So my thought is that, obviously there are a lot of, especially Democrats on the Hill, that want to see something on financial inclusion.
Yep.
I think that where the rubber hits the road is that there, a lot of Democrats and the Fed and the Treasury, they want Fed accounts, which I think would be a complete disaster because, the government I can't see the government running a bank. And I also
a retail bank.
A retail bank.
Yeah.
And I also think a lot of the unbanked, if you understand that, a lot of them are undocumented immigrants. They are, people that don't trust banks for a variety of reasons. So I'm not so sure that they would want to go to the Fed and sign up. So I'm not sure it's the best solution. I do think the private sector could do a great job at this. I hate to say this, but I think that, large companies that have large reach, like social media or like telephone carriers, people who don't trust banks, some of them trust their social media more than the bank, or they'd rather do things on their smartphone without having to deal with a bank. So I do think that that's
And
where there's sort of this argument.
Dina,
Yeah, sure.
remember Libra, the
I
Facebook
do.
project? And I
do.
remember going to a hearing about that, and everyone was just all up in arms, like, oh my God, this is gonna be so disruptive. And but the thought was just, there's something that almost has universal coverage of people who have access somehow to this, and they could be a private source of this coin. Well, they were a little bit ahead of their time. I think we need this kind of top-down regulation to kind of square things up first, and then maybe something like that would not create so much angst.
Thank you.
Yeah,
Thank you
I
both.
think it was the rollout. I think the idea was good, but that's a whole other conversation.
Yeah,
That's a whole other webinar. Let's stop there for a moment. Thank you both so much. We've got a whole bunch of questions to cover. I'm going to kind of read them out through the chat for us, and I'll let you both take them as you please. Shout out to an old friend, Ian, who submitted a question. Do you feel that the executive order balances protection versus innovation, or has it stepped into its role as a regulatory framework? Is it creating this perspective of a regulatory framework for the United States? I think we addressed some of that, but if either of you wants to give that a few seconds, please do.
well, I just think that that it is asking for studies. Each of these categories is asking for studies, and then there are a number of them where, like for the CBDC, they're asking for legislative suggestions, and then there's a follow-up report, with and for they're also asking in just the general crypto report, they're saying, well, give us some, regulatory proposals and some legal suggestions. So I don't think it's at the point where they're saying, okay, the framework's going to be built around the Department of Treasury or the, this, independent organization like the SEC or whatever is out and this one is in. I mean, part of the reason the SEC, I think, was not on a lot of these things as well is that the president can make an order to, the various cabinet level agencies, secretariats that Treasury and DOJ and things like that. But the SEC and FTC and CFTC and those are independent. So the order just says, and we recommend that you do this, or we ask that you collaborate with these. So they can't be directly ordered. But I think I think that we'll have to wait 180 days or 210 days or whatever until we see the structure that shakes out of this. But this is not prescribing a structure; it's asking for questions.
Yep. Thank you, Philip. Let's take the next question real quickly. I want to give this to you, Dina, because I think we spoke to it briefly. Is this a signal for the SEC and other quote unquote loud agencies to get out of the way and let Treasury do the work they need to do to protect the monetary system? Is that your perspective on it, Dina? Is Treasury the top dog in this conversation now?
Well, I think the very top dog is the White House, right? So it's the NEC and the NSC. At the end of the day, if there's a big argument, they're going to step into it. But I do think that I do think that this executive order sends a strong signal that the Treasury, and when it's not the Treasury, the Fed are going to play the predominant role in a lot of this, and then law enforcement as well. The SEC, Gensler he's an independent agency. So there's, he can do a lot of things enforcement wise. And, I thought the ATS thing that he put out was pretty stealth. I don't expect him to go away, but this kind of sends this signal loud and clear to industry that, hey, don't just go in and see the SEC. They're not the only ones involved in this. You have to go to these other agencies as well. So it is lobbying like full employment,
We're at the top of the hour, Dina. Thank you so much. Last question. We'll make it really, really quick. And again, thank you everyone for joining. Does the U.S. producing a government-backed USDC or stablecoin, does that mean the end of Tether, USDC, the other kind of stable coins out there? Just quick yes or no, your perspectives on what that would mean.
I would, on that question, I would say no. I mean, the USDC, the stablecoin that the US would put out would be in a better position in terms of it doesn't have liquidity risk, it doesn't have credit risk. A tether, if there's something wrong with the, the reserves may not, you may have risks there. So Tether will possibly have to develop new features that make it attractive. But I don't think this is the gorilla that's going to kill all the rest.
Dina, go real quickly, if you don't mind.
Yeah, so I was going to say, I think it depends, right? It's all about the lobbying efforts, the complying with the, being helpful on the anti-money laundering stuff. But, I think with all of these stable coins, regardless of how well they are at sort of regulating themselves, like saying we're holding dollar for dollar, you can't just have your own standard. Even if you're being great, you have to have a regulatory structure on top of you, depending on the activity. And that's the issue right now, until there's some kind of, whether it's money market funds were created in the 70s, whether it's a new product or it's a bank structure, that has to be worked out.
Dina, Philip, thank you so much. It's such a privilege. We can go on for hours and hours. We will make the recording available to members and colleagues in the industry in the next couple of weeks or so. Real quick announcement, Philip and Dina, you both are aware of this, to our members, and our next open public meeting is our March 23rd presentation on NFTs. So for those in the audience who could join us, please do. I'm sorry we didn't get to all of your questions. If you have additional questions, email us, info@wsba.co. We'll leave it there. Dina, Philip, again, always a privilege. Thank you for being part of this.
Thank you very much.
Take care, everyone. Cheers.
Thanks, Ron.
Bye-bye.
Bye-bye.